Our next panel is going to discuss about building our diverse future in XR. Our speakers are Darza Stevens, co-founder Mission Impact Academy, Sami Tober, Vinci, Greg Catano, Senior Vice President of Medici, Maxim Jago, Futurist, founder of the Creativity Conference, and the moderator will be Dimitris Δημητριάδης, Futurist. Please welcome them.
Hello everyone. My name is Dimitris Δημητριάδης. I work as a futurist, and we are going, after this great keynote from Mike, we are going to talk about money and how to invest. And I think that we have startups in the audience in order to give some great advice, and of course, hopefully, some investors. So,
can we see how many startups are in the audience?
Oh, we are. Can we see hands of startups? Okay, I see a bunch of hands. Which
about 10.
Yeah.
Dozen? Yeah.
I will not ask about investors. Oh, probably they are in stealth.
Is there any?
So
you should take some weight off of us.
Okay, so I will take one of the concepts of startups and call you to do a small elevator pitch. We will start from Rika.
So I'm actually going to switch it around. They always say ladies first. I'm going to say gentlemen first.
Okay, we can do it. Diversity for the win. So.
All right. So I'm Andrey Lunev, venture partner XR at Startup Wise Guys. Startup Wise Guys is one of the largest B2B accelerators in Europe. We have 400 companies in portfolio. We started that in 2012. I joined the company in 2021, and I lead the extended reality investments in Startup Wise Guys. So by now we have 27 companies invested that relates to XR. Yeah, I think that's about it. Thank you.
Thanks. My name is Petri, representing FOE Ventures. FOE Ventures is myself and my partner Dave Haynes, who have been investing in the VR and AR space for probably 7 or 8 years. But FOE Ventures is 1 year old. We launched a specialist fund for founders building the metaverse a year ago in February. We do pre-seed and seed stage investments up to 500K euros. And as of 2 hours ago, we have 15 companies in our portfolio.
It's a great announcement.
Hi, I'm Rika Nakazawa, and my building for this elevator pitch is 110 floors. No, I'm kidding. So I am the Group Vice President at NTT New Ventures Innovation, where we focus on emerging technologies like IoT, edge computing, private 5G, AI, and so on. And I also am Head of Sustainability for Americas, where I look after our sustainability ambition at NTT. On this panel, I represent the work that I do with venture capital and with startups. So I am a limited partner with How Women Invest, which is a venture fund in Silicon Valley, investing in women-founded startups. I'm also Investor Portfolio, which is similar, investing in women-founded startups. And I'm also a venture partner, in other words, looking for promising startups for Alumni Venture Group, which is a network of alumni of Ivy League alumni, venture capital, and angel investors. And I'm really excited to be here, be part of the conversation.
So great. When we speak about investing, we often speak about qualities. So I want you to name some of the qualities that you're looking for in a startup in order to invest.
In Finland, we have this word, it's sisu.
Sisu.
Yeah. And there's no direct translation from Finnish to English, but the closest one is perseverance. And I think if you are a founder, you need perseverance because you're bound to face a countless number of walls or brick walls you need to either climb over or break through, if nothing else.
Super. Do you have perseverance too? Or?
Of course. Yeah, I mean, perseverance, that was the word that I wanted to say, and perseverance and commitment. But then to expand on that, it's important to what is the goal, what is your purpose you commit to. And in terms of the venture capital, the main thing is that purpose has to be big enough to attract venture capital, because if it's not big enough, it might be good business, might be good investments, but not for the venture capital. Rika, you want to?
I would say purpose-driven. You know, there's a lot of great ideas, and I think there's a lot of excitement about becoming the next unicorn. I lived in Silicon Valley for 17 years, so I can tell you that unicorns are real. We've seen them. But I think instead of pursuing to become the next unicorn, which is very much a dollar figure aspiration or a euro figure aspiration, really having a purpose, because purpose is what's going to bring the talent and the people to your organization and to your startup to help make it successful.
Great. So we have, I will add resilience because it's really close. And I will go to the early stages. What are the mistakes that a startup does in the XR industries specifically, and we hear a lot in the previous keynotes, as regards a VC pitch? Is the window, is the pitching, is the technologies? What are the number one mistake, or if they do more than one, because we have a lot of startups and they are here to learn?
I think, if I may start, because it's a topic that comes up very often, and I think Sergio already kind of laid the groundwork for this. But for too many pitch decks, they come with the technology first instead of the problem and the solution first. Since like 2015 was probably 2015-16 was the last like start of the next hype wave in VR and AR. And that was the first kind of really big one commercially talking, where everybody thought that tomorrow everybody's going to have a headset, it's going to be the next big thing. Obviously, it didn't happen. So a lot of VCs burnt their fingers. But it still left kind of a wave of founders who just fell in love with the technology. And it's easy to see why they fell in love with the technology, because it's such a cool technology. Yeah. So that kind of left the state of pitch decks where they come at you with stock photos of VR headsets and talking about the resolutions. And
old VR headsets.
Yeah.
And many stock photos.
Yeah. Whereas if you're an investor, even we as a specialist investor in this sector, I don't really care if it's VR or not. Yeah, that's a bit of an overstatement, but to me, what is important is there a need on the market for a solution where VR can be a medium to deliver that solution to the audience. So that's kind of my pet peeve as well. Like, I hate it when that happens.
Okay, noted. Next.
Well, I totally support like being over-focused on product instead of the problem. So there is a notion like be in love with your problem, not with your product, and then it will definitely bring you to success. And then focus on the customers, not on the investors, because investors would follow the customer traction. It's hard to demonstrate traction on at the early stage. So the early stage basically focuses primarily on the match between the founding team and the problem they are addressing, and like what are the differentiated factors that makes your team stand out to solve this particular problem. And then the next is the size of the opportunity. So basically, you need to understand and think big, because if you're not thinking big, it's one of the red flags that you're probably not the right fit. But while thinking big, you still need to keep your foot on the ground and understand what is your entry point on the market, basically where you would find your early adopters, whether they pay you with attention or with the money, but you need to get certain traction from those early adopters, because toward the big vision that we see across all decks, like the XR will be 5 trillion, 13 trillion, 1 trillion by 2030. Yeah, like everybody in this room already know that. Like, what is the specific knowledge that you have that you can start moving toward that direction? Because there will be thousands of people moving the same way. You need just to move you need to find your track, and then you would be either, if you defend your niche, you would be either acquired by somebody who moves faster, or you would be acquiring those who identified their specific focus well, because you cannot build and you cannot grow the company fast enough without growing your team and the product. I mean, in a couple of years.
I think just to add as well, everything that you've said is also not asking for enough money. So things are always going to take longer and be more expensive than you think it's going to be. And sometimes things like Silicon Valley Bank happens, and then all of a sudden you're trying to figure out how you're going to make payroll while you're waiting to see if your balance is still going to be in the bank. I think not asking for enough money. And the other mistake that I've seen is not or being discouraged too soon. So you'll hear all kinds of stories of very successful unicorns that in the early days was turned down by 200 pitches, right? Been turned down by 200 VCs, and that's a lot of rejection that you have to take. But that's part of the game. And I know your baby is beautiful, your baby is special. Not everybody's going to see the shine and the beauty of the baby right off the bat. And especially in the space of XR, where it's still in the early part of the curve, is with the perseverance, making sure you ask for plenty of money, and then just knowing that there's probably going to be a lot of rejection before you get the yes.
And to add to that, if I say no, for example, it's usually a no for now. It's not a no for forever. So if you get a no, just take it as a, well, first of all, ask for feedback why it's a no. Hopefully you'll get constructive criticism on you need to work on this, or you need to work on market sizing or whatever. But think about it as kind of a learning curve. So if you get a no from a VC, hopefully down the line, I'd like to see you again with kind of a better product or team, whatever it is. And then I can happily say yes. So that's also what I'd like to add to your comment.
So resilience and a lot of no's, and ask for more money.
I meant to ask, can you see a difference between US and Europe on the amount of money? Because to me, it seems like a very typical European thing where we're like, oh, let's raise 300 because we can manage to get to point X with it. Whereas in the US, I think they understand better that you need capital to get to the point where you are, or do you think it's similar?
I think that, sorry, before I answer that question, I just realized one more very important for the women entrepreneurs out there. You don't have to have a male CTO co-founder to be successful. That's something that I've heard in the past of where women entrepreneurs will say, only 2% of VC funding goes to women-founded startups, so I need to get a male CTO on to be a co-founder with me. That's not true. You can be successful. Of course, if you have one, that's great. Please don't take that as a dismissal of gender parity in the leadership. So with that, to answer your question, from what I heard and understood in my experience in talking to people in the various startups, I think Europe in general tends to be more risk averse. Right? Sort of the leaps of faith are perhaps not as wide and as high. And so there's this sentiment that, okay, we can start with smaller amounts versus the big kahuna, as they say in America. But I think that Europe is also changing slowly but surely around that. And I think that there's also, in general, in the EU in particular, there's a lot of interest in the EU and states and cities themselves helping to foster that startup community and to take advantage of that so that Silicon Valley doesn't become just the nexus of funding and VC capital, but also being able to take public sector investment, which is great because some of that is non-dilutive, which is what you want as an entrepreneur. But in general, I think things are shifting, more conservative in Europe than America, but I think it is changing.
So based on the previous point, how VCs approach diversity and inclusion, and how you're evaluating startups by ensuring that the underrepresented groups are there. Do you have something?
So for us, it's an important topic that we discuss regularly. It's not like ESG questions are very much like the big thing in Europe. Like you have to report on environmental, social, and governmental aspects. But for us, it's not just a tick in a box exercise. We pretty early on, we started looking at our deal flow, and we started tracking how many female founders we had in the founding teams. We realized that it's a number that we can publish it, but it's terrible.
It's terrible.
So we decided to do something. So we set up this program that we call Diversity. It's in collaboration with Women in Immersive Tech. It's kind of a community-driven thing, so we're leading it, but it's not our thing. We've taken on board like Connect Ventures and GFR and some great funds, and then some operators, and built this kind of now it's very kind of formal, so you put in an application, but we want it to be just kind of fostering the idea that if we're building the next stage of the internet, we want it to be built by a more diverse set of founders. So we have like in total now 70 applications from teams with female founders. We are doing collaboration with AWE, so the conference. So we get tickets to the founders, and we're actually putting our money into it as well. So we're paying a stipend to cover some travel for some of the teams. So it's not just an exercise of, hey, here's more mentorship or here's more networks, but we actually want to kind of put our money where our mouth is.
Great. Andrey, the accelerator perspective?
Well, we processed like a lot of applications for the 2 recent XR cohorts, and it's just statistically not that many female founders applying or becoming a founder. It's something that's hard to face. So we, as a financially driven company, of course we need to be responsible also to our limited partners when we make our decisions. But nevertheless, we see a lot of potential in female founders. So let's say we would tend to invest in probably company who has female founders who would be earlier in their development stage versus like male. But it's always case by case decision. In terms of our team, I think, well, I don't have like specific number, but our team probably 60-70% female in general as a company. And among general partners, we have at least 50 or even majority of female founders. Like
Startup-wise, guys, is a great exception between a landscape of
don't just
people
focus on
like
gender, Rika.
So we have a lot of women in our leadership, and they recognize the problem. They actively support female founders, like, again, on the personal level and also institutionally. Like, we would need to talk actually with Petri specifically regarding diversity, how we can support that initiative.
Yeah, I think so. Diversity is, as Amy in her presentation, people tend to default to gender, race, and diversity is really diversity of background and thought. And one of the things that I am inspired by as I look at the venture landscape, especially coming out of COVID, is the variety of different ways that people are trying to disrupt and transform industry. And one in particular that's bringing more women and diverse voices and perspectives into the fold is femtech. There's a lot more investments that's thankfully going into women's health as one example. And again, I think that was very much accelerated. Many of these things were accelerated in terms of healthcare and well-being has been accelerated by the pandemic. But also as different parts of the world and different, can I say, Silicon Valley-ish startup communities are popping up in different parts of the world, especially emerging countries. Therein lies the opportunity to bring diverse, global, different perspectives into the venture landscape. So I think it's a push and a pull. I think there are some things that we have to overtly do to encourage more diversity within startups. But then over the course of additional innovation happening in different parts of the world, organically, that's going to be happening. And hopefully what that will do is then diversify the venture capital faces that you typically see in the leadership roles and to be able to continue driving that forward.
But to your kind of the second part of the question, we don't have a decision-making progress that would evaluate or kind of switch to one side or the other our decision to invest or not based on like diversity in the team. But we do really encourage our founding, like the teams to encourage, like embrace diversity, because we know for a fact that more diverse teams get more diverse ideas to solve the problems that they're trying to solve. So we do really encourage it and try to kind of monitor that on at least a yearly basis.
Yeah, so basically if we cannot invest for certain reasons because there are certain red flags in the business model or startup idea, we still would happy to support and female founders with advice, at least.
For sure.
Yeah.
So, on another topic, based on my personal experience, I ran a Foresight Institute through a DAO, the IFFR DAO, my shameless plug. So we hear about DAOs, we hear about NFTs, we hear about tokens, security tokens, crypto assets. How do you think the landscape will evolve in the future based on this economy? The funding landscape.
The what?
The funding landscape. Like they are going to themselves, you will diversify your portfolio, the community can raise some money to run a program.
Yeah, I think so, and partly this is because I'm biased because I live a lot in this world of sustainability. You mentioned ESG. So ESG is environmental, social, and governance, and people use that, the acronym interchangeably with sustainability. I think more and more some of the ways that these technology anchors, because it's not technology for technology's sake. It's not the killer app, it's a utility. I'm just going to rephrase what Amy said earlier. And part of that is thinking about how these technologies, be they blockchain, NFTs, tokens, how are they going to help us solve some of the greatest challenges that we have as a human race at the moment around sustainability and risk. So, and that's the other thing that I'm really interested in is how risk has become a factor now as to success versus pure profit motives is really about how do you help enterprises and industries better manage risk. And sustainability is a key part of that on so many different dimensions. And so I think that's one of the things that I'm going to start seeing more and more. And I think we should collectively be more interested in focusing on.
I think the clever thing that happened the last 24 months with the rise of tokens and NFTs was it presented a new way really of fundraising for startups through drops and through issuing tokens. Now, unfortunately, a lot of it was just like the new wave. There's always the ones
only hype and not actual.
Yeah. I do think that that's going to stick around, like new ways of engaging communities and engaging them financially as well. Like UNICEF is looking at a lot of ways how they can like incorporate their fundraising, like blockchain technologies or NFTs or those types of technologies and campaigns. So I do think like we are not investing in crypto, we're not investing in blockchain per se, but the technology, the underlying technology, the infrastructure is really, really important, we think, for the future. Like us as a fund, we only invest in equity right now, but it doesn't mean that if there's a token that is issued from a company and the value starts accruing in the token instead of the equity, obviously we're going to want a warrant for the token as well to get where the value is. Otherwise, we're left with equity, which is worthless. So yeah, I do believe that those will remain around. It's just a way of us, again, like the whole metaverse journey, it's a learning process. It's an iteration towards something, and we're bound to make mistakes in the beginning and on this journey.
And break things during the process.
Yeah.
Well, I'm not sure if we need break things. I'd rather to let's create things in the process. Regarding the DAO and NFT and its impact on investment landscape, there is definitely an opportunity to fundraise, and that basically falls in the bucket of general crowdfunding. So that means that you would be raising from retail investors, and usually that comes with higher valuation for those investors than would venture capital invest. And then second, it can, and it also already making that to venture capital in 2022. It inflates valuation, which negatively affects the entire industry. So basically what Robinhood did to public investment, they enabled influx of retail investors who don't have capacity to assess risk, and it's hype-driven bets, and it's almost near gambling to a certain extent. And that creates wrong sense of traction, because it's not traction. And that's the main thing that founders has to understand when you're raising from crowdfunding. If it's not
I will defend the industry, but you can conclude.
Okay.
I mean, there's a reason why there's SECs or financial authorities to kind of monitor.
Yeah,
and
so
put rules around.
there is an exception. If there is a DAO that
Has an actual entity.
no, it's not even about entity. It's about certain criteria that unites people as a community of experts in this DAO entity that can create collective intelligence that can supersede actually each individual investor. But again, you need to look at that case by case. So whether there is an expertise behind community which is united under this DAO, or is just a token sale.
For sure, but in order to connect it with sustainability, because right now sustainable tokens are a thing, DAOs are working really hard.
Yeah.
They are already regulated in Europe by MiCA, marketing crypto assets.
Yeah.
So we have the legal framework to do the job. And I think that it will be a game changer as regards immersive experiences or generative AI experiences, connected always with the community, because the community does the magic. But you need to pay attention to this space, because it will disrupt the investing opportunities.
Right.
If done well, there's a way of doing it, like democratizing this asset class as well, which it's VC has been kind of a very, it's accepted, like there's a stamp of elitism on it, like there's only a certain amount of people that can have access to that asset class. So in a way, if it's done within regulations and like within set rules that you can't lose more money than you actually have or whatever, there is some DAOs that are already doing the investment side that are doing it pretty well, pretty successfully. Like it's kind of this hive mind of kind of bringing the bright minds to figure out together where the trends are going, which company could succeed. I mean, I shouldn't say this, but ultimately I think, like Alvin was talking about, the jobs that will be displaced by AI, I might be out of a job pretty soon with the development of AI.
Yeah.
Like VCs aren't that good in picking the winners anyways, like statistics show it. So with AI, will I be redundant in a couple of years? I don't know.
So we have 2 minutes and 9 seconds. I would like you to give me, with one word and a sentence, your biggest challenge for the next 5 years. Rika?
Well, one word, sustainability, but that breaks up into so many different aspects. I think what we need is a step change in how technology and emerging tech like XR is going to fundamentally shift the way that we are able to solve some of these problems. And AI is likely going to help us, because there's just too many disparate points of data that need to all come together that currently are federated, exist in silos, it's power control. And if we can just allow AI to do what it can do to synchronize all of this to help us with quantum computing, optical networks, all these other new technologies that will be coming into play that are more energy efficient, that are more accessible and democratized, I think that that's the step change that we're going to need to see to really solve for climate, waste, energy, a whole host of issues that we have in the world today.
Thank you, Petri.
Maybe I'll just take a step back, and like the one word would be humanity or human. It seems like the pace is ever increasing, with development in technology and all the crises going on, etc., I think it's always good to keep yourself grounded. And like, if you strip out all of it, my work is 95% of the time just saying no to a founder, and it sucks.
Yep.
So just to keep yourself grounded and remember that it's not just a pitch deck, but there's a person behind it, and kind of
Someone has to do it.
yeah, yeah. So just keep the person in mind.
Super.
Well, I think it was well put by previous speakers, but I think to keep the balance between money and happiness in terms of challenges, yeah. And second, well, to find a way to kind of regulate the speed that we are moving towards convergence, because I think we just haven't realized yet
The velocity.
Yeah, exactly. So the velocity is so huge, and we might be just blown away by the speed of evolution of the things. Like the double exponential curve that Alvin demonstrated. That's I couldn't come up with better.
So run fast to
visual.
get VC's money. Okay. Thank you very much. Thank you very much, all of you.
Thanks for having
Thank
us.
you.
Thank you so much. Welcome to talk to us in the hallway,
Yeah,
which
go
is the
beat
best way
them.
to meet VCs.
I need to bring that in. Maybe not.
Don't go yet.